You're in the Business Insurance Zone with me, Steve Savant, national financial columnist and financial color commentator. We're at the Georgia Dome for the NCAA Finals, our salute to March Madness, and our Final Four product review. And featured on today's show, fixed annuities with nationally recognized annuity expert, Eric Palmer.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome to our special event for the Business Insurance Zone. Yes, we are broadcasting to our normal nationwide audience online on the internet, but we're also distributing embedded to thousands and thousands of agents on our monster email blast. They're all going to see this show, and every year we do it. And of course, with me this year to talk about all that is annuities, Eric Palmer. Eric,
glad to be here.
Welcome to the show. And man, we have a lot to talk about.
We do.
Let's get into it. Let's do MYGA first, get it out of the way, because we got a lot of traffic on indexing, caps, rates, everything else. What's going on in the MYGA department? And was any of this affected by AG 38?
No, I don't think we've seen anything dramatic yet coming from AG 38, but do keep in mind that it does have impact on reserving issues, which will trickle down to the fixed annuity blocks that these insurance companies hold. But, talking about multi-year guarantee, I think the interesting thing that we'll note here is that there's not a whole lot of difference anymore between a 5-year and a 10-year. So when you're working with multi-year guarantees, do you really want to go as long as a 10-year? And just to give you an example, we have Equitrust out there on a 10-year, multi-year guarantee. They're at 3.25%. But let me put this in perspective for a moment. You have Athena annuity with a 7-year multi-year guarantee at 3.20. So only a 5 basis point difference for 3 years. In my opinion, I'm going to go with the shorter term for my client. I'm going to choose a 7-year.
Yeah, no doubt.
So really, I'm not going to talk a whole lot about the long stuff. 7, again, is as long as I would probably go myself at 3.2. It's Athene, very great company, very strong product, a great rate over 3%. But really where we see the activity in the market today is the 5-year. And frankly, that's because it's competing directly with those 5-year CDs that you're getting at the bank. It's competing with the fixed income options that are out there in the market today. And again, clients don't want to be tied up a whole lot longer than 5 years. Sentinel Life, we've been talking about them for the last 14 months. They're still out there, a 2.95% return on a 5-year multi-year guarantee. That's a walk away after 5 years. You've got 2.95. It's nearly 3%. Very strong rate, and again, they're really on the leaderboard. But another company that stands out to me in the 5-year is Oxford Life. They are a B-plus rated company. They're a little bit smaller. We haven't seen a whole lot from them in terms of a product over the last 10 years or so, but in the last couple, they've really stood up to the front of the plate. They're 5 years at 2.5%, and here's the kicker, Steve. It's a free income rider also added to a multi-year guarantee. It's the only MYGA in the country that has an income rider. It guarantees a 5% growth on top of what their current rate is. So 5% plus the 2.5. Right now, if you're using this particular product for laddering, or if you want to turn income perhaps later on in the future, you've got 7.5 working in your favor on the income account right now.
And no expense loan.
No expense. It's a free income rider. So only a couple companies in the country that are giving those income riders away for free. Here's one of them, a rate guaranteed at 2.5%. It's a no-brainer, especially when you're working on stacking or laddering or doing combinations of investments for your clients.
Wow, that is a huge issue. And again, remember, their balance sheet's decent, just that the way the reserves work for annuities, it causes some problems sometimes in the ratings.
Absolutely. Now, I want to talk about a couple of short-term MYGAs real quick. We don't sell a whole lot of them, but we have had some requests recently for just those short-term issues. Clients that want to keep their money somewhat close to liquidity so that they can get back in the real estate market or something else later on. I do want to mention Liberty Bankers Life. They're not the best of ratings in the country, but they are the best of rate. And they've got a 3-year product right now at 2%. So if you're looking for something short-term, 3 years, 2%, Liberty Bankers Life, they're going to be the one to be talking about.
So really, when you think about short-term rates, again, especially when we're talking about bank rate, if you go out to bankrate.com, you can see why these rates are so superior. And remember, we have tax deferrals, so you only pay taxes when you use your money.
Absolutely. And you're talking about CDs at 5% today, taxed. You're talking about 10-year treasuries at just under 2%. Taxed. So again, with the tax deferral, those little 10 basis point increments add up really fast.
Well, let's get into indexing because, man, we have a lot to talk about. Let's go to the caps first. This is the big draw. Let's just talk about it.
Well, I'm going to start off by saying the best cap in the world is the uncapped product today. Now, flashback 10 years ago, we were selling uncapped strategies with spreads. They're coming back. So, when we're evaluating these performance or accumulation-based annuities, we have to start thinking about the new products that are hitting the market today. Something that has just come out, and we'll talk about it here just a little bit more later on in this segment because I want to highlight this product a bit more. But Aviva has just come out with a new product, the Target Horizon. It has an uncapped strategy on the S&P with a 2.85% spread. So in those years where you get a 10% return out of the S&P, your client's going to walk away with a heck of a lot more interest out of that index than they would if they were dealing with one of the annual point-to-point cap strategies out there today. There's about 4 or 5 products in the country right now that have uncapped strategies. Here's my warning. Check out the facts on the company. It's not just about one feature in these products anymore, it's about all of the features. There's some players out there that have been marketing their uncapped strategies, but pull back the curtain, look behind the scene, you're going to find out that those aren't the best for your clients. But this Aviva product looks pretty good to us. We really like it.
And by the way, we've been doing the annuity updates for months and months, and now all of a sudden Aviva is on our grid.
They're back on the map, and it's nice to see because they were really strong for a while there. People are wondering what's going on after Athene and Apollo had purchased Aviva. It looks like they're still rolling out strong with products, and we're going to keep our eye on them going forward here. Now, I also want to talk about Athene. They have a short-term index annuity with an 8-year surrender charge. So again, shorter term for more of you registered advisors out there or people that are looking for the shorter term index annuities. This one has a 5.1% annual point-to-point on the S&P 500. So if you are into the cap game and you don't like the idea of these spreads, a 5.1% is very strong right now in the marketplace. On an 8-year surrender charge, you really can't beat that.
I mean, what's the average right now?
You're probably looking at about 3%. The average index annuity right now is about 3%, and you typically see those lower caps when you have all the other bells and whistles like premium bonuses, riders, and so on. Pure accumulation, I would go with Athene on the 8-year.
What about our guaranteed rates or fixed?
Great question. You don't see a whole lot of great guaranteed rates anymore. You got the 1% on 87.5% of premium, and everybody's at the minimum. Sagicor Life, it's a 2% cap, or excuse me, a 2% guaranteed interest rate on 100% of the premium. Best guarantee in the market on a 9-year index.
That's huge. We're going to come back and talk more about what's going on in the indexing market because we want to make sure we touch all the highlights, who the players are. Remember, this is our March Madness, our tribute. AG 38's over. Whatever it's affected on annuities, it's a done deal. We're looking for the best carriers. When we come back from the break, we're going to continue ranking the top 4 fixed annuity carriers with Eric Palmer. And don't forget to enroll at IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
You know, living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. We're at the Georgia Dome for the NCAA Finals. Our salute to March Madness and the Final Four product review. I'm Steve Savant with Eric Palmer. And remember, you can sign up on our homepage and order today's materials on our website, thebiz.tv. And just a heads up, before moving forward with anything you hear on our show, especially if we talk about tax, which we're not going to do that today, but always consult your tax advisor and your broker-dealer compliance officer. We're talking about fixed annuities with Eric Palmer as part of our tribute to March Madness, the Final Four product review. Let's keep moving because we got a lot to cover. Best premium bonuses.
I'm going to just talk about the top 1 player here in the premium bonus marketplace because it really is a standout. You've got National Western. They have a product called the Ultra Future. It comes with a 10% premium bonus, but if you add the income rider, there's another 5 points in it on the accumulation value. So you can have a total of 15% premium bonus on a 10-year vesting schedule with this product. It's the best in the country.
That is outrageous. And what do they charge you for that?
The income rider charge is actually going to vary, but it's close to a point. Everybody's right around a point anymore, but that seems to be the norm.
Wow. What else are we all looking at?
I want to point out what I consider to be the best hybrid annuity out there. Now, we know that the income riders have long-term care features, but this is a product purely for long-term care type benefits. It's competing out there in the banks, and now we're selling it in our channel. It's called the 4Care Annuity from Forethought. This is a very simple, clean product, but if you put a $100,000 single premium in, you'll have a 2 or a 3 time multiplier for long-term care. It pays out over 72 to 90 months, depending on the underwriting. It's a simplified issue, quick issue type underwritten product, but again, it's based on those LTC needs. It's the money on the side that the client's not intending to use for anything other than that rainy day. But with this product, what I like most about it is that they guarantee you the cost of the LTC will never eat away at principal. So it truly has a principal guarantee in the product, the best one in the market.
Wow, and that's a kicker.
Right.
I mean, to have the LTC. Well, let's talk about income. I mean, we've been talking about income riders. The games out there,
Right.
I mean, are wow.
Well, I think it's actually pretty interesting about the income rider marketplace today is that we have a lot of people running spreadsheets and seeing, it's almost like term insurance, who's got the best payout for the income rider. But what you have to realize is despite the fact that the company might have the absolute highest income payout, there may be lacking on other benefits that are crucial for clients. So I want to point out a couple of things. If you're running just pure spreadsheet stuff, you're going to find Equitrust and American Equity towards the top right now in terms of the total income payout. This could be a couple $100, give or take, more or less than the other players in the marketplace, but if you are spreadsheeting, you will see those two companies. Now, they're good companies and good products, but we've done some analysis in the marketplace today, and we tore apart all the income riders. So what I want to do is I want to highlight 4 products that we think stand out above and beyond those 2 that I just mentioned, purely on the fact that they not only have a great income that's strong and competitive, but they offer more benefit for your client. First and foremost, you have Forethought. They have a product called the Bonus Advantage. Now, this product is specifically good if you're using sort of an RMD arbitrage type concept with your client. And what do I mean by that? Well, when you're forced to take RMDs out of your contract, what happens? You eat away at the principal, right? Well, these income riders sometimes have dollar-for-dollar exchanges on the death benefit values. This product guarantees you up to 250% growth for death benefit, and it's at a 5% compound. So what happens is every time your client's taking out that RMD in the first 10 years from age 70 to 80, it's actually being replaced by the death benefit value. So we're able to show our clients and actually illustrate for our clients the capability to make the withdrawals and still have the legacy be strong if they had happened to pass away anywhere in that period of time. So that dollar for dollar exchange is really important. If you're doing RMDs, Forethought Bonus Advantage is the one to pluck. Now, you hear us talk about it quite often. I want to point out the Benefit 10 from Athene Annuity. This is the hottest index annuity in the country right now. It's a 10-year FIA. But what we like about it is that one rider has 5 benefits, okay? So there's a one rider that you add to the product for your income. It costs 140 basis points. Inside that rider, you get 5 benefits. You either have a lump sum death benefit, you either have a payout over 5 years of the death benefit, you have full-on nursing home care, or you have more of the 2 out of 6 ADL type payout, okay? So it's either 1.5 times or 2 times the amount of income if you end up in that type of long-term care scenario. And also it has the income payout factor. So there's 5 benefits in one rider, and here's the best part. The 140 basis point charge. Every 5 years, if the index didn't perform well enough to cover that charge, Athene will shore up your client's account. That means that your client is protected from losing principal due to the cost of the rider. There's very few products that do that in the country. That's why this is one of the best out there.
By the way, I love that point that you just made. And I see tons of advertisement for index annuities that when you actually take out the expense load, you could lose principal.
You can lose principal.
And nobody's talking this way. They're saying you can never lose principal because of the market. Well, maybe because of the market, but not because of the expense charge in the policy.
And absolutely, and think about this. Sometimes the plan changes. If your client chooses not to use income, they want to go buy a boat,
right.
The money might not be there, and they're going to come calling for you. Now, there's a new product from Aviva. I mentioned at the beginning. We're really liking the way this thing looks. It's called the Target Horizon. Here's a couple of bullets on this thing that I think you got to keep your eye out for. First, it has a 7% premium bonus, okay? It's a nice 10-year clean annuity chassis. It has an uncapped strategy, as I mentioned before. It has a spread of 2.85%, so the performance is very strong. It has a stacked crediting method on the income rider. Now, this is what's interesting. They take a 5% guarantee on that income rider, and they'll add the rate of return in the index to it. So your non-guaranteed income payout could be 5 times what you're going to find in the most competitive guaranteed rider out there. So their normal guarantee is strong, but if you get the great performance out of the index, this product could jump off the charts for you in terms of income, and that's something that really stands out to us. It has a 3 times multiplier if you do end up in a nursing home or confinement, so the LTC benefit is strong. It's a 120 basis point charge, but that opportunity for the huge amount of income, it truly is something big for us. Real quick, something else to keep your eye out for, the Cap Max strategy from Genworth. We can't spend a whole lot of time talking about it, but it's another one of those strategies that gives you an opportunity to roll forward interest and get more bang for your buck down the road.
Think about all these changes, and oh my gosh, we're welcoming Aviva back into the scene. Wow. Remember, you can watch all our shows on the whole March Madness all this week. Just hop out to our website at thebiz.tv. Just sign up on our homepage. That's the Buzz on the Biz for today. You've been in the zone, the Business Insurance Zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.